take on surviving the next crash, quantum consuming, signal versus noise for early stage companies, your calls, and we end with a look at today's markets. Our first letter is from Mark, and Mark asks, what is the secret sauce, strategy, and allocations to survive the next crash? Ooh.
Ooh. Mark, can you tell me when the next crash is going to be?
Yes, please.
I didn't get the memo.
Yeah. So the whole key to surviving the next crash is to know when the next crash is going to be.
Right.
That is the secret sauce. So we've been in this business, Mark. I've been in this business now 40 some odd years, 45 years, let's say. And let's see, we've crashed. Technically, how many crashes do you think we've had?
87, 89, 2000, 09. So 4.
Maybe 5 if you count 2020.
I don't count that, but okay, 5.
Okay.
Or I mean, if you want to say, I don't consider last April where we imploded and bounced right back and crashed, but I guess you could say between 4 and 6, depending on what your definition is.
Yeah, okay, so between 4 and 6 crashes in 40, 45 years. So what we're talking here, Mark, is once every
10 years.
10
8
years.
to 10 years.
Yeah, 8, 9, 10 years. Man, the secret sauce is knowing when things get crazy enough to at least get to the point where like you think there's some form of insane capitulation. Like I think we capitulated like early this year in silver. I think we capitulated in crude oil, a couple weeks ago. I think when you get that kind of capitulation, you can assume some kind of big move. But in the stock market, man, it's hard. The key, obviously, to survive, strategy-wise, I don't think it matters. Allocation-wise, it absolutely does. And the more diversified you are in different underlyings, the more diversified you are in different strategies, the more diversified you are in different time frames, it all helps. But you just have to keep your size small. If you trade small, you can survive any crash. 2008, 1987, 1989, 2020, you name it. If you keep your size in check, if you keep your size in check and you stay diversified, you can survive any crash.
Yep.
Almost.
Yeah, and I think the big one is going to be I think the one that's going to hurt a lot of people if and when we do, and Mark, if you get that memo, please pass it on. We'll be happy to share it. Is that again, I think that 2026 is the end of the buy the dip. And, we'll see if that's, if that's correct. Obviously, if you're buying a dip, it's better than where you're buying it or you were buying it, but it doesn't mean that in the, like we've had for the past 16, 17 years where it's always going to rally up again. So yeah. I think the buy the dip, the reason it's going to come to an end is you're going to have people buying the dip again, and then puking. So.
Well, for the last 20 years, buying the dip has worked, so.
Yep, it's worked.
Right.
Until it doesn't.
I said that's where I'm going to say that it's coming to an end, but I totally has worked. No argument there.
Yeah, I'm a positive drift guy, so I think they're going to go up forever, but there's going to be some nasty sell-offs.
Yeah.
Okay.
All right.
Remember to call us, 989 Lossdog. All right, next. So, SOUN is...
SOUN?
Is, yes. Do you know
S-O-U-N.
the ticker?
Yes.
SOUN.
Yeah.
Does a lot of work in AI. And IONQ does a lot of work in quantum computing.
Yeah.
What do you think about them? Is it time for nibbling? Buying the stock store options? If options, what strategy?
Well,
Says your friend Steve.
I actually am long IONQ. It's a quantum computing stock. It's probably the most it's probably the most active of all the quantum stocks. I am short the 30 puts, the 32 puts, then the 33 puts in there.
Stock's 33 and change.
Yeah. I've been selling puts on every time it drops down, and so far it's been working. Stock recently got up to about 38, but it's been as high as I think 80 or 90, or it's been a lot higher.
It's been 84.64 is
84.64. Okay, yeah, I knew it was up there, but then it's also got down to like just under 30 in the last sell-off. I've been selling puts in there, and so far that strategy has worked. The puts aren't that rich, like they're not like crazy expensive, so that's been my approach in IONQ. I'm long it, I'm short puts in there, and so far so good.
What's interesting is I haven't traded either of these,
Yeah.
but I'm looking at the option markets. The option markets in SOUN are actually a bit better.
Yeah, they are, but it's not.
But it's a $7.65
Yeah,
stock.
yeah. A lot of it was kind of memeish for a while, and then it died.
Went to, this year it's been 22 down to 652, so it's
Yeah.
at the lower end of the range.
Yeah, it's on the low end of the range. Like I said, it was a meme stock for a while.
SOUN?
Yeah. I mean, listen, it's better buying it at $7 than it is buying it at $22. I don't have any of that stock, and I think I traded it like once or twice, but I don't ever remember making or losing any money in there. So I don't have an opinion in SOUN, but IONQ I am long.
Okay. Scott?
Hey, here it is.
My only comment here is, quantum computing, and I don't know anything about it. I don't have any stocks. I'm learning about it.
Yeah.
And it sounds like it's clearly going to be the wave of the future, along with AI. My fear is that quantum computing may get taken down, if AI somehow stumbles. Tom, I'm guessing you saw this. I didn't talk to you yesterday about it, but one of our sources sent out an offering for OpenAI that their post money is about $850 billion.
Yeah, I
It's
saw it.
almost $1 trillion company, and they're burning money. So we'll see. I mean, maybe I'm missing something here. I just think that the hype is real. And when I say real, it's real hype. And they're going to have to really produce some outstanding numbers for all these companies to hold these valuations. So that's my only concern. But
Yeah.
again,
I
that's why
saw
think
that offer, and I'm like, I think it's probably pretty good too.
Oh, I said absolutely no interest. I mean, the reason for me it'd be a good do is only because on an IPO, you're going to have everybody trying to pile in.
Yeah.
But if they don't IPO before some bad numbers come out, whatever. I have no interest. Like, where's a $1 trillion company going? I guess you could have said that about NVIDIA, and it went from $1 trillion to $5 trillion in about 4 minutes.
Yeah.
But not for me.
Okay. Next up. What's one business metric founders obsess over that you think is mostly noise, and one they ignore that actually signals survival?
Steve, that's an interesting question. One business metric that founders obsess over that I think is actually noise. Well, there's probably a couple, because I think that like people sometimes they get all crazy over EBITDA, and they get all crazy. First of all, there's a lot. It's not just one. Founders obsess over things that they think that potential investors want to see. It's not like they're sitting there going, wow, it's like these numbers are so important to me, this or that. Founders obsess over things that sometimes like free cash flow and like EBITDA and things like that. I think the one that they ignore that's super important is just growth. I think the single most important thing that I want to see as a founder is I want to see growth. And I mean, or I want to see as an investor, is I just want to see growth. I want to see steady, consistent, organic, which means it's real growth. And I don't really care about the other stuff. Like, I don't expect a brand new company to be making money hand over fist or anything like that. I just want to see organic growth.
Yeah, I agree. And I think that unfortunately, when a new company, if they take money from private equity, that's what they're pushed frequently towards, is showing, positive, how much money you're making month over month versus how are you growing the business, because they're very different. And, you can wind up being in a situation where you're not hiring, you're not investing, you're not doing things to really grow the business the way you should, because you're so concerned about what your returns look like for your investors. So I completely agree there. The one that I would say it's not a metric, but it's noise, is I think too many founders listen to the people outside of their world around them telling them what to do. And I think that's a mistake. I think you have to stay true to yourself, to your partners, and to your vision. Nothing wrong with listening to people, but you can't sit there and obsess over what they say and try to pivot every time somebody gives you an idea.
That's good.
Yeah.
Jonathan in the Dog Pound asks, I heard that the wash sale rule does not apply to crypto. Is this true? Seems like a great thing for long-term holders. Any gotchas, or can we literally sell the lock in a loss and buy right back?
First of all, why would the wash sale rule apply in crypto?
Yeah, I don't think it does.
It
but
doesn't.
You'd have to do some research.
It doesn't apply in crypto. And why would you sell to lock in a loss? Well, I guess you could just for tax reasons.
If you have a gain that you want to offset.
Yeah. I mean, yeah, sure, go ahead. I mean, there's no gotcha there because
as of early 26, there's no official wash sale rule for cryptocurrencies because the IRS classifies cryptocurrency as property rather than securities, stocks, or bonds. It is not subject to IRC Section 1091, the wash sale rule.
That makes sense. Yeah. And I don't think
so. It says you could sell your cryptocurrency at a loss, claim loss in your taxes to offset other capital gains, or up to $3,000 of ordinary income, and immediately buy the same cryptocurrency. No 30-day wait period. So there you go.
There you go.
The more you know.
I mean, if you can, this would be the first time that you could ever lock in a loss. So it's the first year crypto's ever been down. But sure.
Okay.
There, you found a loophole, dude.
All right. Jonathan. With the volume of trades you do, how do you handle trade journaling? What tool or method do you use to track entries, exits, and lessons learned? That's a good one.
Yeah. Well, I don't journal. So if you trade a lot, it's impossible to journal. I mean, I understand that some people, especially some teachers, there are different schools of thought on investor education, things like that. And there's a lot of people out there that think it's important to, to journal your trades. Any way you can follow kind of maybe what you did right or what you did wrong or what strategy worked. I personally think that with today's technology, most of the trading platforms are a little behind in this sense, but there's no reason to ever have to journal again, in my opinion. I mean, unless you want to make certain notes to yourself, like I did this, which is totally fine. The concept of journaling to me should be done by the software. Like the really good technology in today's world should do everything for you. Like it should say, hey, you know what? We just finished the month of, let's say, February. In the month of February, Tom, the short strangles worked for you, short puts worked for you, iron condors did not work for you, short call spreads did not work for you. Here's your breakdown. You made this much money using this strategy, you lost this much money using this strategy. Everything should be automated by the technology. This is not rocket science. It's right. Well within the ranges of what we're capable of building now. And so I think that
why do you think nobody has built it?
Because it's just everything.
There's on a lot of platforms you can leave yourself, like Tom saying, notes like here's why I did this, or here's the entry, or here's what happened.
Yeah, but it would be cool to have like a spreadsheet almost created.
I think
your trades.
Yeah, I think the software should do it automatically.
Right.
Yeah.
And I think for beginners, it's something that's a little more common because when you're beginning, a lot of people are just like, I really don't know what I'm doing. I'm trying to follow somebody. And, it's good sometimes to have a visual where you leave yourself a note. I think once you've been doing this for long enough, it becomes muscle memory. So I don't think it's nearly, as important.
Yeah, I don't think most active traders journal. I think sometimes beginners do, and I think they quit really quick.
Sure.
Yeah, I think they quit quick.
Quit quickly.
Yeah.
Okay, there you go. It's a long one.
Oh, God.
We'll go through it.
Oh, boy.
When opening an iron condor, let's say I want to go $50 wide, 46 days out to May 1st, 15 delta for the shorts.
You got to chop these down.
Okay, well, this is the example.
Okay.
SPX 6050, 6100 put, and 7100, 7150 call at around 14.5 credit. He's looking at the market closed versus XSP 560, 610 put, 710, 760 call at 6.5 credit. I'm collecting less credit on the XSP, but with my wings being wider, there's a smaller chance of max loss. I would expect to get 50% profit.
I'm giving you 40 characters or
Target
less
faster,
in the future. Yeah.
so that I would be able to redeploy my capital earlier. What should I take into consideration when choosing one over another?
Don't overthink this, okay? Don't overthink this. They're both going to be theoretically.
It's my question. No, I'm kidding.
What?
It's not my question.
Yeah. Don't overthink this. There's almost no difference. Personally, for me, I would want to do whatever I thought gets to the 50% target faster. But the problem is, if you're trading XSP versus SPX, it doesn't make any difference. They're going to move exactly the same speed. So you're not going to redeploy your capital any faster, and you're not going to get any more kind of edge or anything like that. So, mix and match if you want to, or mix and match, or wherever you get a fill. A lot of times I'll put in 2 orders, and whenever I get a fill, I'll just cancel the other one. Like you're overthinking this to the point where it's don't think about it that way. Just route both orders, and essentially, as soon as you get filled on one, cancel the other.
Cancel if close.
Cancel if close. Yeah. Way too much detail in here. Everything. If you're trading S&P index products, the theoretical amount that you're giving up to the other side, to the counterparty, is going to be the exact equivalent, regardless of what product you trade.
Okay.
And you could think about it this way: if it wasn't, there would be amazing ARB opportunities.
Yes.
So.
All right. So next up, what is considered a small position in a stock? I hear it all the time from traders from traders that I listen to on CNBC. And I've heard Tom say it too. So is it relative to the account size? Pamela.
Sure, Pamela. Everything's relative to your account size. So somebody that has a $1 million account trading small might be 500 shares, might be 1,000 shares, and somebody that has a $50,000 account trading small might be 100 shares. I mean, obviously it depends on the price of the stock, but trading small, the way I define it, and I think there's a really easy way to do this, it's whatever your default quantity is on your platform. Now, again, I'm not going to get into 1 share, 10 share, that kind of things. We're talking round lots and up. So it's 100 shares to, let's say, 1,000 shares. And trading small would be in that range between 100 shares and 1,000 shares. And trading small would be something where, when we say it, it's relative to your account size. And I always use that as my default size. So let's just say, my average stock trade is 1,000 shares, because that's probably pretty close to what it is. I might set my default size at 500, and then I'll just do 2. That's it. But you always
when you're doing 2, you're saying you'll do 2 at different prices to work into it, or you're just?
Oh, maybe. Yeah. But I mean, I always default everything to the lower. Let's say my average option trade is 10 contracts. Then on my default, I do 5. Let's say my average futures trade is 2 contracts. Then I set my default to 1. So whatever you set your default at, that's what.
And your
definition
platform
of small
should allow you to do that very simply.
Yeah.
So you can have defaults for stocks, options, futures, crypto, everything.
One of the things that we always did when building trading technology is set everybody's default to the absolute minimum, and then let you adjust it higher if you want to, because if your default's set to a minimum, then you can never really get yourself in trouble. Even if you make a mistake, or you buy instead of sell, or you buy the wrong stock or whatever it is, or you hit the wrong option, you still have a minimum quantity, and that's why we do it that way. But small is relative to account size, 100%.
Yep.
Right.
Yep.
Okay. So the Dark One says, trading small and keeping your size in check certainly can save you in a downturn. But I've never heard a satisfactory answer as to how trading small can turn a significant enough profit.
That's the challenge.
Right.
That's absolutely the challenge. And so for a lot of people, the reason that you stay small is to protect yourself in a downturn, and also to give you the experience to prove concept. But when you have the opportunity and you think that there's an opportunity there based on high volatility, based on low price, based on lots of different things, you have got to scale up and increase your size. Because you're right. If your account can warrant 1,000 shares and you're only trading 100 shares, or if your account can warrant a 10 lot and you're only trading a 1 lot, it is very hard to make a lot of money to hit your numbers. So you have to prove concept and learn how to be successful, and then you have to know when to scale. And that's a challenge. I mean, listen, all of these are challenges, but learning how to scale up when the opportunity is there is super important.
Okay. Andy in the dog pound says, I have an unemployed friend who only trades long calls like the lottery. How can I convince them to come to the easy life by selling credit spreads?
Oh, Andy, I love that. So I guess my question or comment would be, look at his returns. If he's making money, you're never convincing him. That's a for sure. If he's not making money, and my guess is if all he's doing is trading long calls like a lottery, he's probably buying out of the money, options, hoping for a huge move. He's not going to most likely be making money. Then you'll have a chance, and just show him and just say, look, here's another side. You're still trading, you're still involved, still participating in the markets. My simple answer when somebody asks me, what's the difference? And I try to make an analogy that most people would understand. And I say, do you like buying insurance, or would you rather be the insurance company? So there's a reason insurance companies make so much money is, because they understand risk, and they have actuarial tables. They understand what, for the most part, they have outliers, but that's true when you sell options, you have an outlier. Versus if you buy premium and you're buying insurance. So I know Tom doesn't believe in insurance, so but for most people, you'll buy, especially if you're a new parent, you might buy term life insurance, just catastrophic, because you just don't want to be in a situation where you leave a child and a spouse with no money. So to me, I'd rather be selling. I'd rather be the insurance company writing the policies than buying them. That might help.
Andy says, I love that analogy, Scott, so thank you.
Good.
What are you laughing about?
Because Tom was going to say he hated it because he hates
sure.
insurance, and why would you ever compare options trading to insurance? But most people get that. Like when you say, like Tom, you even talked about this with the fires in LA. You'd love to be in a fund where you could sell fire insurance in LA below where the insurance companies are selling it, or if they're even selling it.
Yeah.
Which I think now they're not.
Yeah. So.
Anyway.
Be the insurance company.
Yeah. Okay, so what happened to the OEX? Why did the SIBO let this product fade? Asks Brad.
Brad, what do you...
Hold on 1 second. I need a moment. Okay, moment of silence for the OEX.
I know.
So for those that don't know what the OEX is.
So sad.
It's where Tom and I met. It was the S&P
And where we met. Hello, what about me?
Sol. That's where we all met. Sorry, true,
Yes.
facts. It's where we all met. It's the S&P 100 versus the S&P 500, and they didn't have alcohol or tobacco in it. So I don't know if that ever changed, but I know it was a sin-free, product. It was huge.
Yeah.
Physically, the pit and the number of people in it back in the day was bigger than the SPX. I don't know that we were doing more volume, but there were probably 400 people, brokers, clerks, traders, market makers. From my perspective, the reason that it failed was because it was an American-style option where there was you could have early exercise. It was cash settled, early exercise, versus the SPX, which is cash settled European, no early. And that early exercise pushed, the ability to have early exercise pushed a lot of people out, especially retail, because retail really didn't have the opportunity to take advantage of that feature, the exercisable portion of the option. And I think people just moved away from it and wound up moving into the SPX.
Yeah, it's hard to think of a time before the S&P 500 was really the S&P 500.
Yeah.
Because, we talk about everything's benchmarked off the S&P 500 today, but back, 25 years ago, 30 years ago, the spiders didn't even exist. The S&P 500, nobody even talked about. So volatility was actually the volatility of the S&P 100. The VIX was originally on the S&P 100. So it's just, Markets move. That's
Markets
it.
move.
Markets move.
I mean,
they got disrupted.
What was it? The missiles. What was it? The
MMX.
MME?
MMX.
Does that can't still exist?
No, none of that stuff exists.
Yeah. So
Lots of things.
move.
Lots of things go away. They get replaced with something else, and it's cool.
I haven't even looked. Is the OEX not even listed? It's got
No,
to
it's
be
still
listed.
listed. It still trades.
Really?
Oh yeah. There's like one market maker there.
Oh,
yeah.
God.
Well, there was. I'm looking at front month. So 3-day options, 0 volume.
Oh yeah.
Let's go. Let's go to.
But it still exists. I'm not saying it trades. I'm just saying it exists.
Yeah, it doesn't. It doesn't trade. It exists, does not trade. Open interest, there's 0. So I'm not even sure if there still is a market maker out there.
Doug Hunt's asking, who trades better, Tom with a beret or without?
Ooh.
I'd probably trade better without, because I don't like my brain to be
Being squeezed.
Clogged up
Because
there,
it's so huge.
All warm
Yeah, it's so
there.
huge. It was pushing
Yeah,
through
it gets
the
too
fabric.
hot.
Yeah.
Now it just lives free and
Free thinker.
free thinker, right?
Okay.
It can breathe.
All right, next up. Should the laws be changed at either the federal and or state level to require a corporation's labor force to have representation on the corporation's board of directors? Asks our friend
I like
Peter.
that question, Peter.
Yeah.
I mean, you would think that is an incredibly common sense request, and that, I mean, I would be supportive of that. I can't think why we haven't heard that more often, and I also can't think why most companies don't.
Really, why they don't want it? Because we've gone through this. When your CEO is making, 500-600 times what the average worker is, what do they want representation on the board for? What does the comp committee want that for? The comp committee is the one that approved the CEO's, package. So, is it a good idea? Would it be useful? Absolutely, and it would be hysterical to watch most of these boards who probably have no idea what the day-to-day is of their businesses that they're on the board of.
Well, I think it's kind of funny that you will get like labor participation in different like sports leagues and things like that, but it's very different in the corporate world, and it's so funny how corporations choose board of directors. It's all based on just like, oh, we need a female, we need a male, we need somebody in this demographic, we need somebody with this experience. Like, it's just like there's this whole universe of like professional board members, and they're so pathetic. And the whole industry of boards is like, the whole thing is just, it's...
You love your boards.
Oh my God. It's so lame. Yeah, I'd be 1,000% in favor of this.
It's just not going to happen, but it's a great idea.
As long as it doesn't happen in my company.
That's
Oh.
right.
I'm kidding.
Why
Okay,
no
next
phone
up.
calls? We're feeling lonely.
Yes, we are.
the love?
Come on. 989 Lost Dog.
Yeah, where's the love?
I kept this one on the deck for you, Scott, because you weren't here yesterday. And we all
Why?
want to hear because they love
I
your...
thought I answered this question yesterday.
Yeah, but Scott didn't.
Oh, this is...
You can sit back and relax.
Sit
while
back,
Scott
relax, enjoy the
answers
flight.
it.
Okay.
What is the best trade you ever saw in the OEX pit? The worst trade and the craziest behavior? Neil is asking.
All right.
I answered this yesterday.
Okay,
So
thank you.
the best trade that I saw, there's the best trade that I saw and the best trade that I heard of, because I wasn't in the pit during the crash, but there was a guy that apparently bought the put book at a cabinet, and it only went to 999, meaning they didn't list that there were 1,000, but there were more, and there were like, I don't know, 5 or 10 or 15,000, whatever it was, and he killed it. The best trade I ever
You should
saw,
mention he's broke today.
and he's broke today. I'm not naming names, but yeah, he's
Okay.
broke today. I heard he was a doorman in a building.
no.
The best trade that I ever saw was a guy who I don't think he graduated high school. He was a
What are you
bag
talking about? It
boy
didn't say
at a
the best
grocery
trader
store.
you've ever seen.
It's the best trade. Whatever. Let
the
him
best trade.
speak.
Trade.
Trade.
The best trade. And he came in on expiration, and he made it look like everything was for sale. and he started selling calls, and then he turned around and just bid them up and crushed it. That was amazing because I'm like, what does this guy know? Clearly he didn't know anything, but what did he know? And it was just amazing to watch the craziest behavior. Every once in a while you'd see a fight, and I remember two guys going at it. One guy was bloody, and a pit boss came in and said, who was involved? I'm looking at him, and everybody's like, seriously, go look at the guy with the blood dripping down his face, and you might probably figure out one of the two people. But there's the pits when they were in their prime. There was nothing greater. It's just capitalism at its purest point. So may the OEX rest in peace. May all these pits rest in peace, because now everything is really done on screen. But awesome, it's an interesting question. 2 OEX questions today.
Yes, we like our OEX questions.
Right, Tom? What do you say? What
To
was
reminisce.
the best trade you ever
I
saw?
gave really good answers, but I can't.
When you bought
mean,
a 10 lot for $1 and sold it for $2.
Eye rolling over here.
Here, it was amazing. I was selling calls. He had a 10 lot. I bought them and I made 50 cents. It was awesome.
best trade ever.
Best trade ever. That's good.
So Dog Pound says, as an outsider to trading world, what are some good resources or books to master the market maker's playbook?
Ooh, as an outsider to the trading world, what are some good resources or books to master the market maker's playbook? Well, there's not really. I wouldn't say that there's a market maker's playbook because I don't think you can master that. But there are good books on. Let's think about good books on trading. Liar's Poker is not bad.
Yeah, but that's fun.
Yeah, well, that's what's he asking here? Some
I mean,
good
learning
resources.
resources.
I know, but
oh
resources.
my God, what was Macmillan? The Bible.
I mean, no, but that's not a good. That's options is a strategic investment.
Yeah,
that's
options is a
1,000.
strategic
It's
investment. That was
1,100 pages long.
All right, how about Julia's book?
It's great, but those are resources book. Those are reference guides. You know, you want some fun stuff.
Oh, fun? Yeah, sure. Liar's Poker.
Yeah, I mean, talk about
when genius fails.
Yeah, but we've mentioned that a bunch. I mean, there's not that many great, like, fun trading books. I always recommend, Where the Customer Yachts, Liar's Poker, When Genius Fails. Those are the kind of fun books.
Okay, there you go. Next, what advice would you give your 35-year-old self?
I would have started.
Tyler.
I probably would have gone faster into the entrepreneurial space than I did. Like that's kind of a little misleading because I've been an entrepreneur my whole life, but I probably would have tried to build a company at 35 rather than at 40 something.
And for me, the timing's perfect because I was 35, 36 when we started Thinkorswim.
Yeah.
So I'd say stay the course. It's going to turn into a really good ride.
Yeah. I mean, the advice I'd give to 35-year-olds is the same advice that I would give to a 25-year-old or a 45-year-old, which is, take as much risk as you can and do whatever you want to do that you think you're going to have fun at.
Get your helmet on, get in the game.
Yeah, get your helmet on. Just get in. Like, don't let anybody hold you back. Don't listen to anybody else.
Yep.
Don't let any of the naysayers influence you. Just go do your thing.
Yeah.
Okay.
For sure.
Nobody's going to sit there, listen to somebody's crazy idea and go, "Oh wow, that's amazing. Here, take all my money and just go do it." Like you gotta do it yourself. Like it's not like, nobody pushes it all in for you.
Okay. All right, another one. Looking back 100 years to 1926, historically, the S&P 500 has experienced an average intra-year pullback or drawdown of around 17 to 19% during midterm election years like this year. How would you recommend positioning to potentially capitalize on this kind of dip if it occurs? And if a pullback does materialize, meaningful.
Yeah.
What's your suggested approach for building or adding to a portfolio as it unfolds? Thanks and love the show. Ezeil,
it's really, I have heard that during midterm elections, there's...
Seems like a big number.
It does. And I don't know how much different that is than during any other year, but whatever. What I will tell you is that on paper, it sounds really, really good. Like it's a really good idea. Just sit back, wait it out. And as soon as you get a 17 to 19% or 15 to 20% downturn, scoopy, right? That's what you're saying. The problem is in the middle of that 15 to 19% downturn, you, like everybody else, is going to be looking to sell, not to buy. And for anybody that thinks it's really easy to buy into a downturn, unless you are extremely comfortable being contrarian. Now, I'm a contrarian, and I am extremely comfortable being contrarian, so I will buy into sell-offs, and I will sell into rallies. But unless you've been doing that your entire trading career, it's so freaking hard, you have no idea. Now, I will tell you that buying into a sell-off is a little bit easier than selling into a rally for most people, because they're more conditioned, they're more trained to buy.
Bullish.
Yeah,
you're conditioned to be bullish.
Yeah.
You think everything's going to wind up turning around and rallying anyway.
The one thing you have to realize is when you're buying into a dip, that there's a 90% chance you're going to be too early, so you're going to take a little heat, and you've also got to just kind of like, you kind of nibble all the way down, like I was doing this time in crypto.
And at that point, if we do have, and I just looked it up, I did just Google this, and the answer that I'm getting is the average drawdown for the S&P 500 during a midterm election year is approximately 19.4%, based on data from 60 to 24. So my answer would be you're going to have a really good opportunity if there is some sort of a sell-off, because vol is going to explode. Vol explodes, option prices go up. You could sell puts, go to the out of the money puts. So if you don't want to dabble in buying long shares, you could sell, go out and sell some puts. And you've got exposure, you're taking advantage of higher volatility, higher premium. It's a good way, for me, it's a good way to start adding or building into a portfolio. I know Tom's answer is going to be nobody ever sells puts with the hope that they get hit. I agree with that, but it's a probably a bit safer approach, assuming you're doing 100 shares, because obviously a put has to be, it's one contract just for 100 shares. But you could get your delta down, 5, 10, 15, 20 deltas. So you just have to be willing to take the 100 shares, even though it's not 100 deltas of exposure.
Okay.
Yeah, I mean, I think sitting back and letting the market come to you is the smartest thing you can do. So even if you're a little early, it's okay. But if you're long-term bullish, go for it. Yeah. I mean, I like that approach.
Okay. Considering that it's generally easier to grow a smaller account than a large one, would you trade 150,000 split across 3 separate accounts, or keep it all in a single account?
Ooh,
Daniel.
Daniel, that's just.
I personally would not.
That's taking a little bit of. That's taking a lot of liberties with your math here. I don't understand why that's any different at all.
The only reason that I would split an account, I don't, but we have talked about this, is that if somebody is going to do both long-term investing and then shorter-term trades, and it becomes confusing for them, or I've had customers say to me, I don't want to see stocks and options in the same account, like my options account, my stocks, my stocks account. I don't do it that way. But if your brain is wired in such a way that it's cleaner, it's easier for you to segregate or separate, then go ahead and open multiple accounts. But just remember, you're going to be bouncing from account to account, versus just looking at one set of numbers. So I wouldn't do it from a standpoint of, if you have $150,000 in one account, you think you're going to make X, but you think you'll make some multiple of X if you split that into 3 $50,000 accounts. That's not going to happen.
Right.
Yeah, I mean, it's just, you're just playing with the math here. It doesn't make any sense. And plus, managing 3 separate accounts is a pain in the butt.
Yeah. All right, remember to like this video and subscribe to our YouTube channel, and send us your questions to oneluckydog@lossdog.com.
So speaking of liking something, I'm giving a shout out to your sweater.
Ah, thank you.
You're
Tom was
welcome.
just saying I look like a grandma.
Right,
But
I
it's
like
so
it.
cute.
Very colorful. Are you is that Nick Crochet? I don't even know what that is. Did you make that?
No, I did not. I wish I knew how to make this. My mother might probably, but no, I bought it.
Nice.
But
Yeah, she's preparing
It's grandma
for-
chic. Stop it. Don't
There you
even
go.
say it. Do not.
There's a word that Lila is now using. I can't say it because it's definitely a banned word.
Oh.
But somehow I'll text it to you, and somehow it's a compliment. I've never heard the word used as a compliment.
Oh.
But it's becoming one. It's not grandma chic, but it does begin with a C. Okay.
Oh. And it ends with a Y?
Yeah.
Yeah. I've heard it. Yeah.
Right?
Yeah.
Tom's
take it.
brain's racing right now.
Yes.
Hey, Tom, it actually could be a Wordle.
Yes, it could be.
It could be a Wordle.
We'll see if it shows up on Wordle one of these days.
Right? Yeah,
Yeah.
crazy. Somehow we'll put that with the 2026 6-7.
Oh yeah, we gotta let that one die.
right.
Just so everybody knows, we are having a phone issue, a technical phone issue. So if you're calling, don't call us right now until that's fixed because you won't be able to get through. But send us your
Tom, at
questions
this
and
point,
put
you
them
should
on the
give your
dog pound.
You should give your cell phone and let them call in on your cell phone.
Tom's maybe, or
Yeah.
we'll get a company
Lossdog cell phone.
Yes, a one lucky
I
dog
like this
cell
question.
phone.
I want to hear this. I want to hear the answer to this next one.
Yes. What is Tom's highest conviction trade so I can fade it? As Mastro.
Mastro, you don't deserve. You don't deserve my highest conviction trade here. If you had asked me this question yesterday, I would have told you bonds for sure, because in the 113 handle or under 114, where are
Big
bonds
move.
right now? Let's see. Let me
They're
just
114.27 up 7
114.27. They've rallied a little over a point. They got down to 113, like 25 or something. So if you had asked me this question yesterday or before yesterday, I would have told you bonds. Hands down, that was my highest conviction trade. But they've already rallied a point, which is a pretty big rally. I've also been extremely bearish in crude oil, thinking it's a little bit grossly overpriced here. But that's come down a lot. Highest conviction trade. Ooh boy, I got to think about this. So Micron has earnings tomorrow after the close, I believe. Is that
They
correct?
Yep, tomorrow after the close.
Micron has earnings tomorrow after the close.
And that stock has rallied a lot.
A lot. A lot.
A lot.
All right, you're going to hate
Don't tell me you're bullish. That stock about a week and a half ago traded down to 357, and it's now 456 and change.
Yeah, it's right at 100 points.
Yeah.
Yeah. So what's the expected move? $45? $50?
The expected move is 40.
40. I love the 3-day. I'm a seller of the 3-day calls at $100 higher, at least $100 higher. So let's say the
555.
555s. Where are they? Let me guess. 555s. I'm saying they're going to be $1.30.
99 to 118.
99 to 118. Okay.
Very good.
I'm a seller of those. I'm a seller of the calls 2.5 times. 2.5 times the expected move with 3 days to go.
That would be $80. Oh, 2.5 times. I'm sorry. It's $100.
Yeah.
Sorry, 2 times. 2.5 times. Yep.
Yeah, 2.5 times.
Yep.
I hate every time I do this I get killed, but that's my see I haven't been bearish this week because it's triple witching and I never get short on March triple witching. So I mean until Friday I'm not bearish. So but I think in Micron, the stock's rallied 100 already. I don't think there's any chance it goes down, but I think $100 higher from here is a long shot.
There you go.
Okay, back to your comment about organic growth.
Yeah.
The dog pound is asking, how does one measure organic growth other than revenue or profitability? Customer count, or what if you are in a business that only deals with a few large customers?
Well, that's very different, but most people don't build if you're starting out and you're building something new and you're an entrepreneur, you're building something new, it would be really rare for you to go B2B with just a few large customers. I mean, you're talking about the absolute hardest path to go down. I just can't imagine that that's a direction or a path that very many entrepreneurs take. I think if you are building something from scratch, you're probably going to go B2C, and organic growth is measured by the number of people that you bring on board. I mean, obviously you'd like to see a little bit of revenue associated with that, but you want to see your numbers grow. Like this month, if you have 100 customers, next month you want to have 200 customers, and next month after that you want to have 300 customers. You never want to see those numbers go down. And with higher numbers comes higher revenue, and eventually comes profits and all that kind of stuff. We have always been focused on steady organic growth. And it'll be the same thing here at Lossdog. We're looking to grow our network. We're looking to grow our software as soon as we launch it. And by the way, thank you guys so much for supporting our upcoming launch. We have tens of thousands of people already signed up. It's super exciting, and we can't wait to roll out our software. It looks amazing. And our crypto offer is fun. So these are all things that that add to organic growth. But that's what I would say. I just want to see the numbers go up every month. I don't care about, I don't care that much initially. I don't care that much about revenue. I don't care that much about free cash flow. I care about seeing the numbers go up.
The dog pound saying, if you can explain in layman's retail trader terms, that somebody bought the put book at a cabinet and it only went to $9.99 and they killed it.
Oh, so
it's also just a rumor too.
Well, we'd like to hear it.
I mean,
I know, but yeah.
I mean, the story.
So cabinet was $1.
The story has gotten
Right.
the story's gotten crazy over
Hold
the
it,
years.
shut up.
The
let
cabinet
me
was
talk.
$1. So options back then traded in eighths, which is $12.50, or teenies, which was $6.25. But somebody could sell. You go, why would somebody want to sell something for $1? But they did. And the book. So at the time, in electronic trading, you would have people outcry, screaming, and if brokers had orders that they didn't want to hold on their deck, they could send it to an electronic book. And the book would have to go, so again, NBBO, same thing with an option. You'd have to trade with the book before you could trade out in the open crowd. In this case, there was some way out of the money put, and he just said, I'll buy the book. Rather than saying buy $9.99, he said, I'll buy the book, which was the whole thing. Again, I wasn't there at the time. I'm saying it's a rumor. It's changed over the years. But he bought options at $1 that went to who knows what, allegedly.
That's true.
Why do you think it's not true?
Because the story's changed a lot over the years.
And it wasn't Tom.
Yeah.
Of course not. All right, so that's what you have. If oil is high and inflation is high in June, and the new Fed chair lowers interest rate in June, what market reaction do you expect?
Well, I first of all don't expect.
Excuse me.
I doubt the new Fed chair is going to lower interest rates in June if oil is high and inflation is high. So the Fed chair has the ability to do things with short-term rates, but the chances of them forcing the markets, trying to force the markets to change actually interest rates, incredibly difficult to do, and I don't think they could do it. So I don't think the market might react prior to that. I think if oil prices started to come down, I think it would make the new Fed chair's job 100 times easier. But you would need to get bonds up back around 116. They're currently in the 114 handle. You would need to get bonds up around 116, maybe plus. And you would need to see the yield curve contract a little bit before the new Fed chair can really lower interest rates. You can't just arbitrarily say, I'm going to lower interest rates to some...
Well, you can. No, you can, but the market could tell you to take a hike.
Yeah, the market will...
The market's going to win. So if they artificially, if he comes in and to this question, if we have high inflation, which we probably will if oil stays up, where it is, the market forces aren't going to care what they do, to Fed funds. They're going to go, great, you can do whatever you want with Fed funds, but here's the real rate. Here's what the market really is saying the market's going to be.
Yeah, the real rate's what's important. And
That's right.
The Fed, like Scott said, the Fed can do whatever they want, but the market reaction will be the real reaction of what rates should be.
And if Whereas I guess the answer to this question is if they do lower rates, the market's not going to react positively to that if we're in a high inflation, environment.
Yeah, the market's not going to lower rates. That's all that happens. The Fed lower rates, but that doesn't mean anything because the market's going to be much higher.
Yeah, bond market.
And that's going to confuse the hell out of everybody.
Mm-hmm.
Yeah, stock market, we'll see. Probably not.
Oh, the stock market won't like that either.
Won't like it.
Nope.
Right. Okay, next up. I'm still struggling in finding my edge or position in trading. I would like to add some technical indicators to have a reasonable entry. I know Tom has none, but I need a little bit more like the market feels high or low, overbought or oversold, by looking at the price. Any advice?
Sure.
Do it again.
Sure. I mean, you could look at since it's all subjective anyway, like you can look at price relative to itself and make a judgment call. I mean, why not?
It's same. Look at where implied vol is, look where vol, implied vol. Those are all things.
Well, even forgetting about, just look at price, forget about volatility, forget about anything else. I mean, if a stock was up here and now it's down here, then it's not overbought. And if a stock was down here and now it's up here, it's not oversold. So the question is, like everybody makes a pretty big deal out of what we call reasonable entry. You've written it here, reasonable entry. And the bottom line is that nobody really knows what a reasonable entry is. It's all very, very subjective. So
is it relative to you, to your account?
It's not relative to your account. It's relative to whatever you feel like. Like I have no problem buying, certain stocks at certain price levels, but other people do. I had a friend I was buying some stock last week, and a buddy of mine said, "Oh, I'm waiting till it gets like $10 lower." I'm like, okay, he doesn't know anything, and I don't know anything, but turned out I was right because I bought it and then it went higher. But he never got it.
Of course, you were right.
No, I'm just saying because it never got as low as he thought it was going to get.
From my perspective, you just got to be in the game. And that's why trading small is so important, because if you get in and you haven't thought about something and you're wrong, you can add to it, or you're not going to get really hurt if you're wrong, assuming it's defined risk. So engagement is the key. I think paralysis is what hits most people. Paralysis by analysis, so they just don't know what to do, so they don't do anything, as opposed to just saying, you know what, I'm going to put my toe in the water. Don't jump in the deep end. Just put your toe in the water and just, sprinkle some stuff out there and see how it works.
Yeah, you're good. I mean, you got this. Your guess is as good as anybody else's, but you got to at some point
make
you pick a spot. Yeah, yeah.
I mean,
if you like technical indicators, find a couple you like and buy on support or sell on resistance.
Yep.
That's fine.
Okay. Dog Pound says, any fun stories about adjusting trading style when you guys left the floor? I imagine there was a window where you had to figure out your new style of strategy and trading.
There was. When we first left the floor and we started Thinkorswim, I was really confused for about a year.
Really?
Yeah, for about a year, because it took me almost a year. The first couple of trades I made after we built our own platform were huge. Like I made the hugest trades, and I was so used to trading a certain way, and I just couldn't get it out of my head. It took me a long time, and I definitely traded way too big when I first got off the floor, and I definitely traded like very similar to how I would trade on the floor. And
the big difference is we went from big market makers to retail customers. And, as a market maker, what your big edge is being able to stand next to brokers that have paper. And you don't have that when you're trading as a retail customer, on a platform.
Yeah, but
the environment changed, so you had to pivot too. But you got
to remember when we built our first trading platform, like there wasn't even any trading platforms really out there then. They were all they were crappy, like like the old day trading platforms and like Daytech and the old TD web-based platforms and they were really bad platforms. So we were building like the first really kind of cool platform at the same time trying to figure out, what the hell are we doing? Like, remember a lot of these exchanges didn't even facilitate the type of trades we were doing. So
right.
It took about a year. It took me about a year. I can't speak for Scott. It took me about a year.
It was different.
It was different. It took me about a year. I was trading too big. I was trading way too many just index products. They were just bringing on things like, spiders and Qs and things like that. So all that stuff was new to us. Yeah. The VIX didn't even exist then. So.
Okay, so PSA is, sorry friends, we had many calls today that we could not answer because of a software glitch. But we will be able to answer tomorrow, hopefully.
Yeah, so if you called in today,
will be fine.
if you
So
called in
please call in tomorrow.
If you called in and you couldn't reach us, stay on hold overnight. Stay on hold right now. Don't get off till tomorrow, and we will for sure be there. Sol's going to stay around and sleep here tonight.
Or just send.
Sure.
So you can send an email.
Or send an email.
No. Stay
Or
on hold.
Call us back
Yeah,
tomorrow.
call us
One
tomorrow.
lucky dog at lostdog.com, or just call us tomorrow.
Call
Yes.
us tomorrow, even if it's questions about the OEX, about what we talked about today. Call us tomorrow. That will be fine.
And as soon as Scott hangs up, I'll post his cell phone. You can call him.
Appreciate that.
Yeah, we got lots of stuff.
All right. Market talk?
Yeah, I'm ready for market talk.
Let's go to market talk.
When they were down last night, when I was watching the market overnight, I was like airport lagged, whatever the hell that means.
Yeah, I had that too.
So I was airport lagged yesterday because I spent 9 hours in Boston Logan Airport on Sunday, which is
Brutal.
brutal. Talk about an airport that needs a
Revamping.
that needs a new look and feel. But I was off. So I'm watching the markets last night. At one point they were down 30. When I woke up this morning they were down 20, then down 15. And I'm thinking to myself, you know what? They were up 50 yesterday or 60 yesterday at the end of the day. They're going to rally at some point today and then you can probably sell them. And they didn't even wait. They were up 30 before the opening. Now they're up 40 and we've pretty much been sitting here all morning.
Yeah.
Yeah, I mean, it's a nice,
So you had, Bitcoin's caught a little bit of a bid, 70 close back to 75.
Oh, no, it's caught a huge bid. It's up almost 10,000 off its lows.
Yeah. Oil, I know you're still really bearish on it.
I'm not here. So let me tell you. So I reduced the size of my position this morning because it finally all came in. So we got back, all the money pretty much in crude oil, maybe more than I lost originally. But I reduced the size of my position. Now I'm just short some wide strangles. That's it.
Gold was under 5,000 last night for a little bit, yesterday for a little bit, back up over 5,000.
Yeah.
NASDAQ's up at 184, 25,000 change silver, a little over
By the way,
80.
gold and silver premium. Remember when
Yeah.
silver was up, Ivy rank was up to 130. Now it's like 50 or something. I don't know where. It was really pretty low this morning.
It is 49.
49, right. And gold dropped a lot. I mean, premium has gotten annihilated in both those underlyings.
Yep. And that's the issue where you go out and buy premium if you're wrong. Especially if you're buying premium when, oil's up where it was a problem. VIX future is down 54 cents at 22.45. VIX cash is $22 down $1.52. So it's come down a lot, still elevated. Bonds, as you said earlier, back up upper 114s, 114.29. Big moves today is really Micron. It's their earnings tomorrow. So besides that, nothing crazy.
Micron's going to steal the show between now and tomorrow's close.
Yep. Well,
That's
everybody,
the
that's
expected
the
move?
trend.
40.
40
It's going to
what?
be all Micron between now and tomorrow's close. And again, it's triple witching. So there's going to be a lot of index volume, a lot of futures rolls. So the
Yep.
volume will be heavy. If you haven't
Yep.
rolled yet to June, you got to roll your futures to June. It's summertime, everybody.
Summertime. Does it feel like summertime in Chicago?
It's 15
No.
degrees this morning in Chicago.
13,
15.
15. And then I love when I ask this question, what was the wind chill? And you said wind chill doesn't matter. Feel like doesn't mean anything. It's
Wind
whatever
chill
the
is 30.
temperature is, it is. Right?
It was 15 but with the wind, nice warm Caribbean breezes blowing in off the lake, it was 30.
Awesome.
Caribbean breeze.
Ciao.
That's a new one. Slash. Take us out.
Happy Tuesday.
Happy Tuesday.